Evercore ISI's head of internet research, Mark Mahaney, joins me now for where we might be heading next. It's good to see you as always.
Hey, Scott.
Does this selling run its course? What's your take?
I don't know whether it's run its course. So I think these are issues that are probably out of my pay grade to figure out. But it seems like most of this stuff from where I stand seems self-inflicted. I looked at the fundamentals of most of the large cap internet names, all the high quality names. Their fundamentals were very consistently strong or robust, and as recently as maybe the end of January, beginning of February, when they gave their earnings and they talked about the March quarter outlook, things seem to be very consistent. So we just had a lot of policy volatility, as far as I can tell, that's really impacted these stocks. The backdrop here, of course, Scott, is we had a 2.5-year bull market in some of these tech stocks, especially the highest quality names. The large cap internets I look at were up 100% from the middle of 22 when interest rates stopped rising to the end of last year. So there was a setup here for if you had a negative catalyst come through, there was a setup for a correction. We've had the catalyst.
I mean, evaluating multiples is in your pay grade, so I'll ask you this. As I said to our earlier guests, you've had a significant re-rating in almost every one of these names within the space, whether it is Alphabet from 20.5 forward to 17.9, from Meta to 28.4 to 23.2. Amazon's had a re-rating. Have they re-rated enough in your mind? If they were frothy before, do they make more sense today?
Yeah, I wouldn't say that they were frothy before. I just think that they were kind of close to full values. I think there was very little dislocation in the internet space other than Uber.